Based on the historical data and forecast, Bitcoin exhibits a strong upward trend, consistently testing and breaking through resistance levels. The RSI values, while fluctuating, have generally remained above 60, indicating bullish momentum. The Bollinger Bands show the price recently moving towards the upper band, suggesting continued upward pressure. Given this context, I recommend a portfolio strategy that combines a trend-following approach with RSI-based entries and exits. We will implement a long position strategy. Specifically, I suggest entering a long position at $110,600 on May 28, 2025, coinciding with the forecast price and the upper Bollinger Band. Given the recent price action, a conservative stop loss should be placed at $108,800, just below the recent support and the lower Bollinger Band. The initial target price is set at $111,700, aligning with the forecast price and the upper Bollinger Band. If the price reaches this target, we can consider moving the stop loss to break even to protect profits and potentially set a new target closer to the previous resistance level of $112,100. This strategy leverages the prevailing bullish trend while incorporating RSI and Bollinger Band signals to optimize entry and exit points, aiming for high returns with managed risk. Based on the historical data and forecast, Ethereum demonstrates a clear upward trend. The price has consistently tested the support level of $2,600 and has shown resilience, bouncing back with increased momentum. The RSI readings, particularly the recent values above 60, confirm the bullish sentiment, though nearing overbought territory. Considering the forecast, which projects prices reaching $2,900 within the next week, a long position is highly advisable. The Bollinger Bands also support this view, with the price consistently trading near the upper band, indicating strong upward momentum. Therefore, I recommend entering a long position at $2,700. Given the recent price action and the upward forecast, a stop-loss order should be placed at $2,650 to mitigate potential losses. For the target price, I suggest $2,830, aligning with the forecast and allowing for a substantial profit while managing risk. This strategy combines the bullish trend, positive RSI, and Bollinger Band signals to capitalize on the anticipated price increase. The portfolio will be 60% long Ethereum, 20% in stable coins, and 20% in other altcoins. Based on the historical data and forecast, XRP exhibits a sideways trend with fluctuating RSI values between 48.5 and 67.0, indicating periods of both overbought and oversold conditions. The Bollinger Bands show volatility, with prices occasionally touching the upper and lower bands. Considering the RSI nearing oversold territory and the forecast predicting a slight downward trend initially, I recommend a carefully timed long position. Our entry price will be $2.34, coinciding with the initial forecast price and a relatively stable point within the recent trading range. A stop loss will be placed at $2.16, just below the established support level, to protect against significant downside risk. The target price will be $2.42, representing the recent resistance level, offering a reasonable profit potential. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, which is currently around $2.32, it signals a potential buying opportunity. Conversely, if the price approaches the upper band, around $2.34, it suggests caution and potentially exiting the position. The portfolio will prioritize the RSI strategy as the primary driver, with the Bollinger Band serving as a secondary confirmation. This combined approach aims to maximize returns while managing risk effectively, capitalizing on short-term price fluctuations within the established support and resistance boundaries. Based on the historical data and forecast, BNB exhibits a generally upward trend, supported by consistent price increases and a forecast predicting further gains. The RSI values fluctuate between 56 and 70, indicating periods of neither extreme oversold nor overbought conditions. The Bollinger Bands show that the price has recently been trending near the upper band, suggesting bullish momentum. We will implement a combined strategy leveraging RSI and Bollinger Bands. We will enter a long position when the RSI dips below 60 and the price touches the lower Bollinger Band. The entry price will be $685. The stop loss will be set just below the lower Bollinger Band at $679. The initial target price will be the upper Bollinger Band plus $5, which is $698 plus $5, resulting in $703. To maximize returns and manage risk, we will employ a dynamic target strategy. Once the price reaches $703, we will move the stop loss to break even, protecting our initial investment. We will then adjust the target price to the next resistance level, which is $712. This approach allows us to capture further upside potential while safeguarding against potential pullbacks. The portfolio will be 60% long BNB, 20% in cash, and 20% allocated to other cryptocurrencies for diversification. This strategy combines trend following with volatility-based entries and dynamic target adjustments, aiming for high returns while mitigating risk. Based on the historical data and forecast, Solana exhibits a generally upward trend, consistently bouncing off the support price of $173. The RSI fluctuates between 57 and 67, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands show the price has been approaching the upper band recently, suggesting potential for a breakout. Considering this, I recommend a long position strategy. We will enter a long position at $179, placing a stop-loss order at $173 to limit potential losses. The target price will be $183, based on the forecast data and the recent approach to the upper Bollinger Band. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 50, we will hold the position. If the RSI reaches 80, we will take partial profits at $181 and move the stop loss to $176 to secure gains and protect against a potential reversal. This blended strategy combines trend analysis, price action, and momentum indicators for a balanced approach, aiming for high returns while managing risk effectively. The portfolio will consist of 60% of the long position strategy and 40% of the RSI strategy. Based on the historical data and forecast, Dogecoin shows a slight upward trend, bouncing between a support of $0.215 and a resistance of $0.235. The RSI fluctuates, mostly above 55, indicating bullish momentum, but nearing overbought territory. The Bollinger Bands suggest periods of volatility, with the price occasionally touching the upper band. Considering this, I propose a strategy focused on capitalizing on short-term upward movements while mitigating risk. We will implement a combined RSI and Bollinger Band strategy. My recommendation is to enter a long position at $0.231 on May 29, 2025, when the forecast price is at $0.231. The RSI is 65.8 on May 27, 2025, which is slightly overbought, but the forecast suggests a potential bounce. Place a stop-loss order at $0.215, right at the established support level, to limit potential losses. The target price will be $0.237, aligning with the forecast price on June 3, 2025, and just below the resistance level. This strategy aims to capture a quick profit from a short-term upward move, with a clear exit point defined by both the forecast and support level. This approach balances potential gains with a conservative risk management approach. Based on the historical data and forecast, Cardano shows a slight downward trend recently, but the forecast for the next week indicates a sideways movement around 0.76 to 0.77. The RSI consistently fluctuates but remains above 50, suggesting a neutral to slightly bullish momentum. The Bollinger Bands indicate periods of volatility, with prices occasionally touching the upper and lower bands. Considering these factors, I propose a moderately bullish strategy focusing on short-term gains. My strategy involves entering a long position at $0.768 on Wednesday, May 28, 2025, coinciding with the initial forecast price. Given the recent price action and support level at $0.744, I will set a stop loss at $0.744 to limit potential losses. The target price will be $0.808, aligning with the recent resistance level and a reasonable profit target. If the price breaks above $0.808, I will reevaluate the position and potentially adjust the target price. The RSI is currently at 52.3, which is not oversold or overbought, so we don't need to consider RSI as a primary indicator. The Bollinger Bands are narrowing, suggesting a potential breakout, which supports the possibility of a move towards the resistance level. This strategy aims to capitalize on a potential short-term upward movement while managing risk effectively. Based on the historical data and forecast, TRON shows a clear upward trend. The price has consistently traded near the upper Bollinger Band, indicating strong buying pressure. The RSI has fluctuated but generally remained above 60, suggesting bullish momentum. Considering the forecast for the next week, with prices predicted to rise from $0.278 to $0.29, I recommend a long position. Our entry price will be $0.278, coinciding with the beginning of the forecast period. To mitigate risk, our stop loss will be set at $0.272, just below the support level, providing a buffer against unexpected dips. Our initial target price will be $0.286, aligning with the forecast peak and offering a reasonable profit. To maximize potential gains, we'll implement a trailing stop-loss strategy. Once the price reaches $0.286, we'll move our stop-loss to $0.278, protecting profits and allowing for further upside. If the price continues to rise, we'll adjust the stop-loss accordingly, always maintaining a minimum distance of $0.006 from the current price. Our final target price will be $0.29, representing the end of the forecast period and a significant profit potential. This combined strategy leverages the bullish trend, forecast data, and risk management techniques to achieve high returns while minimizing potential losses. Based on the historical data and forecast, Sui shows a mixed trend with recent downward pressure. The RSI fluctuates between 45.5 and 65.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Given the forecast prices hovering around $3.73 to $3.79, a cautious approach is warranted. My recommended strategy is a moderately bullish approach with a focus on short-term gains. I suggest a long position entry at $3.71. The stop-loss should be set at $3.49 to protect against unexpected downside risks. The initial target price is $3.86, aiming to capitalize on potential short-term upward momentum. If the price reaches $3.86, consider taking partial profits and moving the stop-loss to the entry price of $3.71 to secure gains and protect against a potential reversal. This strategy combines RSI signals, Bollinger Bands analysis, and support/resistance levels to maximize potential returns while managing risk. The support price of $2.05 acts as a strong floor, further informing the stop-loss placement. Based on the historical data and forecast, Chainlink exhibits a sideways trend within the support of $15.3 and the resistance of $16.1. The RSI fluctuates between 48.9 and 65.7, indicating periods of both oversold and overbought conditions. Considering the forecast price of $16.2 to $16.5 over the next week, combined with the Bollinger Bands consistently above the price, a moderately bullish strategy is warranted. We will implement a strategy based on the RSI and Bollinger Bands, aiming for short-term gains within the established range. The entry point will be $15.7 when the RSI falls below 55 and the price touches the bottom of the Bollinger Bands. The stop-loss will be set at $15.3, just below the support level, to mitigate potential losses. The initial target price will be $16.3, aligning with the forecast price and the upper end of the recent trading range. If the price reaches $16.3, we will move the stop-loss to the entry price of $15.7 to secure profits and manage risk. If the price continues to rise, we will set a second target price at $16.5. This strategy balances risk and reward, capitalizing on short-term upward momentum while protecting against downside risks. Based on the historical data and forecast, Sui shows a mixed trend with recent downward pressure. The RSI fluctuates between 45.5 and 65.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Given the forecast prices hovering around $3.73 to $3.79, a cautious approach is warranted. My recommended strategy is a moderately bullish approach with a focus on short-term gains. I suggest a long position entry at $3.71. The stop loss should be set at $3.49 to protect against unexpected downside risks. The initial target price is $3.86, aiming to capitalize on potential short-term upward momentum. If the price reaches $3.86, consider taking partial profits and moving the stop loss to the entry price of $3.71 to secure gains and protect against a potential reversal. This strategy combines RSI signals, Bollinger Bands analysis, and support/resistance levels to maximize potential returns while managing risk. The support price of $2.05 acts as a strong floor, further informing the stop-loss placement. Based on the historical data and forecast, Pendle demonstrates an overall upward trend with recent price fluctuations. The RSI consistently fluctuates around 60, occasionally crossing the 70 threshold, indicating overbought conditions but not sustained. The Bollinger Bands show that the price has been trending towards the upper band recently, suggesting bullish momentum. Considering the support price of $4.4 and the forecast prices consistently above $4.5, a long position strategy is recommended. We will implement a strategy using the RSI and Bollinger Bands as primary indicators, with a supplementary stop-loss based on the support level. Our strategy involves entering a long position when the RSI dips below 60 and the price touches the lower Bollinger Band. Given the recent close price of $4.57 and the forecast predicting further increases, we will enter a long position at $4.5. The stop-loss will be set at $4.4, just below the established support level, to mitigate potential losses. The initial target price will be $4.84, aligning with the forecast for June 3, 2025. If the price reaches this target, we will consider a trailing stop-loss to secure profits and potentially capture further upside. This portfolio will be 60% long Pendle, 30% in stable coins, and 10% in cash. Based on the historical data and forecast, Eigenlayer shows a generally upward trend with fluctuations. The price has tested the resistance level of $1.6 multiple times and is currently trading around $1.4 to $1.5. The RSI is hovering around 55 to 65, indicating neither overbought nor oversold conditions. Considering the forecast prices, which predict an increase to $1.71, and the Bollinger Bands consistently widening, suggesting increasing volatility and potential for price movement, I recommend a long position. We will enter a long position at $1.55. The stop-loss will be set at $1.4, just below the recent trading range, to limit potential losses. The initial target price will be $1.63, aligning with the forecast and the upper Bollinger Band. To refine the strategy, we'll incorporate RSI signals. If the price drops and the RSI falls below 30, indicating an oversold condition, we will enter a long position at $1.16. The stop-loss will be set at $1.1, and the target price will be $1.5. If the price rises and the RSI exceeds 70, indicating an overbought condition, we will consider taking profits or initiating a short position. Combining these signals with Bollinger Bands and forecast data, we aim for a high probability, high reward portfolio. The portfolio will prioritize long positions based on the overall upward trend, with opportunistic entries during RSI-driven corrections. Based on the historical data and forecast, ApeCoin shows a slight upward trend. The RSI consistently fluctuates above 50, indicating bullish momentum, but hasn't reached the overbought level of 80. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. The forecast data predicts a continued upward trajectory, with prices potentially reaching $0.741. Considering these factors, I propose a long position strategy. We will enter a long position at $0.695, placing a stop-loss order at $0.639, just below the support level to protect against a potential downturn. Our initial target price will be $0.7, aligning with the recent resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, indicating strong upward momentum, we'll adjust our target price to $0.724. Conversely, if the price approaches the lower Bollinger Band, we'll tighten our stop loss to $0.65 to mitigate risk. This dynamic approach allows us to capitalize on the predicted upward trend while adapting to market volatility, aiming for a high-return investment with calculated risk management. Based on the historical data and forecast, Injective shows a clear upward trend. The price has been fluctuating within the range of $13.9 to $15.6. The RSI consistently above 50 indicates a bullish momentum, with recent values nearing overbought territory. The Bollinger Bands also suggest a strengthening upward trend, with the price frequently touching the upper band. Considering these factors, I recommend a long position strategy. We will utilize a combination of RSI and Bollinger Band signals to optimize entry and exit points. The entry price will be $13.9, coinciding with the support level and a potential pullback after recent gains. The stop loss will be set at $13.5, just below the support level, to mitigate potential losses. The initial target price will be $15, aligning with the resistance level and the upper Bollinger Band. If the price reaches $15, we will move the stop loss to the entry price of $13.9, securing profits and limiting risk. The final target price will be $15.3, based on the forecast data, to maximize potential returns. This strategy combines trend analysis, support and resistance levels, and technical indicators for a high probability, high return investment opportunity. Based on the historical data and forecast, Quant shows a clear upward trend. The price has been consistently moving higher, breaking through the resistance level of $104 and reaching $112. The RSI values have been fluctuating but generally above 50, indicating bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. The forecast for the next week predicts continued upward momentum, with prices expected to reach $120. Therefore, I recommend a long position strategy to capitalize on this trend. My recommended strategy is to enter a long position at $107. Given the upward trend and the forecast, a reasonable stop loss would be placed at $104, just below the recent resistance level, to limit potential losses. The initial target price should be $116, aligning with the forecast for June 3, 2025. If the price reaches $116, we can consider moving the stop loss to break even to protect profits and potentially set a new target price of $120, based on the forecast. This strategy combines trend analysis, RSI, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, dYdX has shown considerable volatility. The price has fluctuated between a support of $0.625 and a resistance of $0.672. The RSI indicates that the asset is currently in a neutral range, not deeply oversold or overbought. The Bollinger Bands suggest that the price is currently near the middle band, with potential for movement either way. Considering these factors, I recommend a cautious, short-term trading strategy focused on capitalizing on short-term price swings. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will enter a long position at $0.618, coinciding with a forecast dip and a potential bounce from the lower Bollinger Band. A stop loss will be placed at $0.587, just below the recent low, to limit potential losses. The initial target price will be $0.667, aligning with the recent resistance level. If the price reaches this target, we will reevaluate based on the RSI and Bollinger Bands. If the RSI approaches 80, we will consider taking partial profits and adjusting the stop loss to protect gains. This strategy aims for a quick profit within a week, capitalizing on short-term volatility while managing risk effectively. Based on the historical data and forecast, Ether.fi shows a potential for a bullish trend. The RSI consistently above 70 indicates overbought conditions, suggesting a potential pullback is possible. However, the forecast prices for the next week predict a steady increase, reaching $1.54. Combining these factors, I recommend a strategy that leverages the predicted upward movement while mitigating the risk of a potential pullback. I suggest entering a long position at $1.42, placing a stop loss at $1.37 just below the recent low, and setting a target price of $1.54, aligning with the forecast high. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been consistently trading near the upper band, further supporting the overbought condition. If the price breaks above the upper band, indicating strong upward momentum, we can adjust the target price to $1.6. Conversely, if the price touches the lower band, it signals a potential buying opportunity, but for this strategy, we'll maintain the initial entry and exit points. This combined strategy offers a balance between capitalizing on the bullish forecast and protecting against potential downside risks, aiming for high returns while managing volatility. Based on the historical data and forecast, KAITO demonstrates a clear upward trend. The RSI consistently fluctuates, nearing the overbought territory of 80 on several days, indicating potential price corrections. However, the forecast suggests continued upward momentum with prices projected to reach $2.56. Considering this, I recommend a long position strategy focusing on capitalizing on short-term pullbacks while benefiting from the overall bullish trend. My proposed strategy involves entering a long position at $2.25, coinciding with the first forecast price. Given the recent RSI readings and the Bollinger Band's recent contraction, a stop loss should be placed at $2.15 to mitigate potential downside risk. A first target price of $2.44 is set, aligning with the forecast price for June 1, 2025. If this target is reached, we can adjust the stop loss to break even to protect profits. A second, more ambitious target price of $2.56 can be considered if the price action remains favorable, but with tighter stop loss management. This portfolio combines the bullish forecast with RSI and Bollinger Band signals to maximize potential returns while minimizing risk. Based on the historical data and forecast, PancakeSwap demonstrates an overall upward trend, supported by consistently increasing forecast prices. The RSI fluctuates between 50 and 69, indicating periods of both buying and selling pressure. The Bollinger Bands show that the price has been trending within the bands, suggesting volatility. Given the current RSI of 69 and the forecast indicating further price increases, I recommend a long position. Entry price should be $2.85, placing a stop-loss order at $2.5, just below the support level, to mitigate potential losses. The initial target price is $3.22, the resistance level, for a quick profit. To optimize the portfolio, I suggest a layered approach. After reaching the initial target price of $3.22, consider moving the stop-loss to the entry price of $2.85 to secure profits and allow for further upside. If the price continues to rise, set a second target price at $3.5, reassessing the RSI and Bollinger Bands for confirmation. This layered strategy aims to maximize returns while managing risk, capitalizing on the bullish trend and utilizing technical indicators for precise entry and exit points.